Alright, welcome to the 90-minute cycles. This shit will be hard to understand, but once you do, you can read the market so clearly. As I've said before in these videos, it's always time over price. Time works better than price. So we read time first and then the price. That's why we don't trade London, because London never works well. Anyways, here's a quick disclaimer. ICT has yet to teach this, so as of today, this is what the simplified trading Discord has been able to gather around this subject. ICT did start to mention this. I don't remember when, but he did in some of his videos. But his content got leaked somewhere about the 90-minute cycles. So there's 3 people that created a PDF that this video will be based on, which is Kalo Trades, Tom Trades, and then some other random dude. I have no idea, or I didn't get his name though. But these 3 people put together a PDF, and I'm gonna be presenting this PDF into a slideshow. So let's start. 90-minute cycles. The 90-minute cycles are split up into 4 quarters, Q1 to Q4. These cycles are in every single market, from Asia, Australia to New York PM. You know the cycles are correct when they equal to 6 hours. There are 4 sessions in a day, that is Asia, London, New York AM, and New York PM, which is Asia, accumulation, London, manipulation, New York AM, distribution, New York PM, continuation or reversal. But these 4 quarters are all different to each other, so I'm going to explain that soon. But let's start with Asia. Asia session, quarter 1, accumulation. So each quarter also has their 4 quarters. So Asia session, quarter 1, accumulation. Q1 is from 6 to 7:30 p.m. New York local time. All the timestamps that you will see throughout this video are all New York local time frame, which is GMT -4. Your chart should be set to New York local time anyways. But Q1 is 6 to 7:30, and that is accumulation. Q2 is 7:30 to 9, which is manipulation, or the kill zone for Asian session. Q3 is 9 to 10:30, which is distribution, which is also a kill zone. And Q4 is 10:30 to midnight. That is continuation or reversal. London session, quarter 2, that is manipulation. Q1 is midnight to 1:30, accumulation. Q2 is 1:30 to 3, manipulation, kill zone. Q3 is 3 to 4:30, distribution, that is also a kill zone. Q4 is 4:30 to 6, continuation or reversal. New York session AM, quarter 3, distribution. Q1 is 6 a.m. to 7:30, accumulation. Q2 is 7:30 to 9, manipulation, kill zone. Q3 is 9 to 10:30, distribution, kill zone. Q4 is 10:30 to 12, continuation or reversal. PM session, quarter 4, continuation or reversal. Q1 is 12 to 1:30 p.m. Q2 is 1:30 p.m. to 3, which is manipulation. Q3 is 3 to 6:30, distribution. Q4 is 4:30, distribution. Q4 is 4:30 to 6, continuation or reversal. As you can see, manipulation and distribution are both kill zones all throughout. And you can see Q1 is always accumulation, Q2 is always manipulation, Q3 is always distribution, and Q4 is always continuation or reversal. Now we go into days. 4 quarters, 6-hour cycles, 24 hours. So from 6 p.m. to midnight, that is Asia session, that is accumulation. So Asia should accumulate. Q2 is midnight to 6 a.m. That is London session, manipulation. Q3 is 6 a.m. to 12 p.m. Yeah, 12 p.m. That is New York AM session, distribution. Q4 is 12 p.m. to 6 p.m., which is PM session, continuation or reversal. Weeks. Yes, these quarters go all throughout, from sessions to weeks to months. Week, 4 quarters, 4 major trading days in a week. Q1 is a Monday, accumulation. Q2 is a Tuesday, manipulation, which is the best day or true week open. Q3 is a Wednesday, distribution, best day, again, kill zone, kill zone. Q4 is a Thursday, continuation or reversal. Friday resets the weekly range. Is it the best day to trade? However, if you know where the weekly range is and you know its equilibrium, you can always trade this day. Months. Yes, months. 4 quarters. Q1, week 1. Accumulation. This week is always choppy. Right now, we're about to finish this week's. It did actually trade quite well, but if we do look over the daily range, you can see I think twice took out a yesterday's high or yesterday's low. Q2 is week 2, manipulation, best week. Q3, week 3, distribution, best week. And lastly, Q4, week 4, continuation or reversal. Goddamn, I'm just repeating myself in this video. When to expect a choppy price action. After holidays, prior to high impact news events such as CPI, non-farm payroll, FOMC, and rate announcements. Any following day after a large price swing was presented. When the S&P 500 is going up and the US dollar is going down. This is a good condition for seeking trading opportunities. This is normal. However, when both are going in the same direction, anticipate chop, and a lot of it. Whenever you have two negatively correctional markets moving in the same direction, anticipate consolidation. When Q1 is usually choppy, week 1 is usually choppy, Monday is usually choppy, the Asian session is usually choppy. 90-minute cycles. The first phase dictates the second, the third, and the fourth phase. If the first phase consolidates, the second will expand, the third will consolidate, and the fourth one will expand. If the first phase expands, the second one will consolidate, the third one will expand, and the fourth one will consolidate. If Q1 expands, Q2 consolidates. If Q2 expands, Q3 will consolidate. If Asia extends, skip London, trade New York AM, and then skip the PM session. If Asia consolidates, trade London, skip New York AM, then trade the PM session. London is more prone to make the highs and lows of the day whenever Asia consolidates, and anticipate price to run the highs if you're bearish or the low if you're bullish. SMT confirms that you have a high probability setup. Tuesday is more prone to make the high and low of the week whenever Monday consolidates. Best trading days will have consolidation during the Asian session. Without SMT, we do jack shit. Easily mark out these zones. Use the Fib time zone tool. Change all the numbers to +1, so 0, 1, 2, 3, 4, so on. First color should be blue, second should be cyan, third is red, and fourth should be dark green. Blue is consolidation or reversal, cyan is accumulation, red is manipulation, dark green is distribution. For each session, go 1 hour and 30 minutes back and drag it to the first session. So if you're going to mark out New York AM, that would be 4:30 to 6. So this line here is 4:30, and you can see this is 6 down here. So you drag it from 4:30 to 6. So you can see that 7:30 is going to trade well. It goes to 9, 9 goes to 10:30, 10:30 goes to 12, which is lunch. And you can see that's consolidation. So that's how you mark out these zones. It's what it's gonna supposed to look like. You got accumulation, manipulation, distribution, continuation inside the accumulation. That means this right here would be Asia session. Again, accumulation, manipulation, distribution, continuation or reversal. That's manipulation. That's London. Distribution, accumulation, manipulation, distribution, continuation. This would be New York AM. Continuation or reversal, accumulation, manipulation, distribution, continuation or reversal. This would be New York PM. So on, so forth. Now, I'm not going to show you any more examples. With what I just taught you today, I want you to go into your own charts and see how time completely overrules price. Use this information to predict where the market is going. Time plus draw on liquidity will always work together. However, think this when you're aiming for the draw on liquidity. Do we need to take out liquidity before we go to the draw on liquidity? That is, if you're in a long, are you going to get stopped out before we actually continue up? If you're in a short, are you going to get stopped out before it continues down? Do we need more people into the market? If you're in a short and it starts to retrace back up, is it simply to get more people into the market, into a fair value gap, into an order block, into a breaker block, mitigation block, whatever it is? Is the market just trying to get more people into the market before it actually goes to the draw on liquidity? It's always time over price. So, if, again, this accumulates, this manipulates, then distribution should do the exact opposite of what manipulation did. So on, so forth. Accumulation, this one expands. Accumulation, this one expands. If this expands, this should accumulate. This should accumulate, this should expand. So on. So, watch what the other markets did, see what it did do, see what it didn't do, predict where the next market is going to do. Anyways, thanks for watching. My name is AC. Take care.